From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, the S&P 500 futures and day 2 of 2016. The high of the day in the S&P came in at 2014 quarter at 1:15 Central Time. The low came in at 1995 quarter at 11:15 Central Time. And last, we're 2009 half. We're up 2 ticks on the day. Total volume, 1.6 million minis trade and 3,000 big S&Ps trade in the pit. The MIM started showing small to buy, like 200 million to buy, gradually went up, and the actual MOC came out by 340 million MOC. Tomorrow we've got a busy economic schedule. I warned you about this, that even though the week after the first week of the year tends to be kind of a slow week, our economic calendar doesn't indicate anything like that. We've got a busy EcoCal today, or tomorrow. Tomorrow we've got the MBA mortgage applications, we have the ADP employment report, we have the international trade number, we have the Gallup U.S. job creation index, we have PMI services, the PMI services index, we have factory orders, we have the ISM Non-Mfg index, we have the EIA Petroleum status, or the API, and we have the FOMC minutes. Now look, today's trade, what should I say? It was a little quieter than it was the first day of the year. And I would suspect that after such big moves around the globe that you would probably kind of get that kind of price action. But that said, you know, even though the S&P sold off, and when it did, it went down to 1995, I started going on Twitter and telling people I thought that the S&P was going to have a nacho on new highs on the close. And the S&P traded back all the way up to 2014 quarter, sold off a little bit. I suspected it would before the MOC. MOC came out, and then the futures rallied again late in the day. Again, we were 09.5 going into the cash close, and then right onto the futures close, we were trading 2011, something like that. But, you know, look, I'm not really ready to you guys, first of all, you know I'm a bull, but I'm no fool. But I'm really not ready to throw myself in to say that I think that there's a low coming or that there's a big rip coming. You know, we're only 2 days into the trading year. And based on the current volatility, like I was talking about yesterday, I don't think that you're supposed to just think that that's going to subside right away. Crude oil is still suspect as some of this stuff gets undone with the sanctions. Iran's going to come online. There's always a lot of turmoil there between the Saudis and the Iranians, and there's a lot of oil floating around, you know, and there's going to be more problems there. But anyways, what we're looking at now this week, the January expiration is a short expiration. This Thursday and Friday, we'll be looking for the Pitbulls Thursday, Friday low before the Jan expiration. And then the stats, the S&P cash study for the Jan expiration, show that the Monday of the Jan expiration as being the weakest day of the week, and the Tuesday of the week of the Jan expiration as being the firmest day of the week. I should have said Monday being the weakest day of the week, and Tuesday being the firmest day of the week. Now that kind of coincides with what we've been seeing recently, where the futures kind of get weak on the last day of the week, come in weak on Monday, and then you get that bounce going into late on Monday, and then you get this kind of funny turnaround Tuesday price action that everybody was talking about. As far as this goes, the shortened economic calendar also brings us into the Martin Luther King holiday, which will be a 3-day weekend going into the weekend of Jan 18th, the 15th through the 18th. So, you know, thin to win could start to play out here as we go into that expiration and beyond that a little bit. But again, I'm just not ready to throw my hat in to say that I think the markets are going up sharply or going down sharply right now. I think that there's a lot of two-way cross two-way currents going on here. In addition to, like we saw on the close today, a little bit more buying from the mutual funds on the close. That said, like I said, not really ready to throw my hat into this thing one way or the other. We're just too early in the year. I made my projections. I said that I thought that the range in the S&P this year would be 1,700 to 2,250. And I'm not going to change that, at least not right now. We'll leave it like that, and I'll see you guys tomorrow on the opening print.